Welcome back to the second half of the Future Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. We've got Scott Bauer, the CEO of Prosper Trading Academy, joining us to talk financial markets. Scott, welcome. Good to have you with us. And with no numbers, good morning, no numbers at the bottom of the hour, we can dive right into some of the price activity. We've seen rates catching my eye up to begin the week again. And what most notably seemed to be attracting attention here was the short end, which spiked severely yesterday. We're talking the 2-year and the 5.
Absolutely. And it's interesting. Overnight, big reversal from where we were just about 12 hours ago, even 9 hours ago. And I think that's because we're seeing those rates actually back off a little bit. But you're right, that short end is catching a big bid here, trying to catch up. And, you know, the market is just in flux, Ben. And I think we're going to continue to see this, which is just going to get exacerbated by earnings. And with all of the announcements coming up now over the next 3-4 weeks, and all the anticipation about companies, you know, and the bottom line being affected by higher prices, it's going to be real interesting to see what happens with this bond market during earnings season.
And the yield curve, we're looking at the 10-year here right now, the line chart for the daily. I want to pull up the candles, though, on the 30-year, if we could look at this chart, because it does sort of speak to the point. You can see how the 10-year there has yet to take out the highs from earlier this spring, 1.75 for the TNX. In the case of the 30 years we're looking at here right now, Scott, no, you're well aware of the 2.5 threshold that we saw back in March, but I just want to point out, look at how the 5-year, in similar situation in terms of the 2, how, well, it's well above that spring high that we saw, and just leading the way to the upside here. Real quick, look at the yield curve. We've got the 30 versus the 5 right here. Scott, I mentioned no numbers at the bottom of the hour, but I did want to point out the NFIB, a little bit of a disappointment today. I think the major focal point is going to be the jolts. We have a couple of bond auctions a little bit later on, but the job openings, the layovers, the turnovers, that major disconnect we've seen in terms of employers unable to get workers back in to fill the positions.
Not only unable to get people back in to fill those positions, but wages are going up. So employers are having to offer deeper. They have deeper pockets. They have to offer higher wages, and they still can't get people back. So it's really this vicious cycle that we're in right now. And I have a feeling, though, I really do. I'm trying to be optimistic about this. I have a feeling that could change during the fourth quarter, because now with the unemployment help that has expired just recently, many of these people, I believe, going into the holiday season are going to be picking up jobs, albeit maybe they're going to be temps, maybe they're going to be part-time jobs. But I don't know. Many of the stores, many of the big retailers that I've been out to recently have big signs, big postings up. We are hiring for the holiday season. So, I think we may see a turn. I really do.
We're looking at in this instance, the B-roll, they're actually turning one of those help wanted signs around. And as you can see, some big ones out there. Scott mentioned Walmart, 150,000 holiday positions they're looking to fill. Scott, you mentioned some of these benefits that are expiring. A lot of people have been chalking it up to that. Some of the other pandemic-related trends that we've seen. I heard a interesting data point of 4.3 million small businesses open since the pandemic. Ultimately, in theory, you would think those are workers, people that may not be going back to work, or hoping at some point that they don't have to ever again, and maybe kind of waiting for that fourth quarter, as you mentioned, the vicious cycle. What are you chalking it up to? A lot of people had said schools reopening is what we needed to see. Daycare for parents ultimately coming back online and more readily available. What do you see the disconnect coming into play? Is it just wages and holdouts?
I also think that the timing of the Delta variant and the huge spike that we had, in summertime and leading into, towards the end of those benefits that started to expire, I think that really just piled on. That really exacerbated the situation. And much to your point, people wanting to see schools back, wanting to see daycare back. Well, now that the Delta variant is not gone, but now that the levels are coming down, thankfully, and hopefully with the expiration of some of these benefits, the combination of that will put pressure on people to get back to work. They can't stay out of work forever. They really, as much as many people may try to, but what are we going to see here? Because, I saw something that Jenny Horn posted just yesterday about a sign in Chicago about we don't have, staff. There's staff shortages. Please be patient with our staff. And that is everywhere. But again, I'm trying to be optimistic, and I think that may turn going into the holiday season.
Yeah, I personally experienced that. I'm sure you have as well. Some of the pressures that we're seeing here is what I wanted to talk about in terms of currency markets. Well, you mentioned them in terms of some of the weaknesses that we've been seeing coming back into play here, tied to the pandemic and all of this. Take a look at the yen. It's been under pressure in a big way. This is helping keep the U.S. dollar inflated. Also, the euro currency, which has been weakening recently. Scott, your thoughts on what's playing out here in terms of the 6J?
Sure. I mean, their BOJ has these currency controls in place. So they're just not keeping up with the rest of the world in terms of these rising rates. And so that's why we're seeing this unbelievable weakness in the yen right now. That could move later in the week as we get CPI and retail sales data, but the yen is the weakest against the dollar that we've seen in about 3 years. It's down, 4 or 5% in just 3 weeks. And they're just not catching up. Their currency in terms of yield is just not catching up with the rest of the world right now.
You mentioned the last few weeks. We're looking at the last few weeks. I just want to point out as we pulled the daily time frame that it's not just the last few weeks. This has been the most recent breakout. We've been coming off since, the beginning of the year, up around that 97.50 area. We're talking about, almost 100 handles to the downside here. And I also mentioned the euro currency, a little bit of weakness there, supporting the U.S. dollar. Scott, you bring up a good point, CPI, PPI. This could move financial markets. This could be a game changer for the rates one way or the other. I mean, a really strong number would certainly be supportive of what we've seen in terms of the run-up into the closely watched inflation data due out tomorrow and Thursday.
Absolutely. And in terms of what those data points may mean to the Fed, I don't think they're going to mean anything regardless of what they are. I think they have their minds made up, set up, and the market is pretty much accepting right now that we're going to start to see this tapering sooner rather than later, probably in November. So the jobs report, the poor jobs report that we saw last week, I think solidified that in terms of a negative report, if you will, but really not changing the Fed's mind. But that could really still spark more inflation fears, these two numbers later in this week, if those are hot numbers, like you just said.
Scott, I don't think you were prepared for this. I'm not sure if you got to look at it, but if not, just briefly, I wanted to point out that a strong jobs report out of the UK is actually raising some of those expectations that we'll see a rate hike next month or December. It might be. Ultimately, we have to wait for the Bank of England, but ultimately, I mean, this is certainly a trend that we're seeing here. We saw it from the RBNZ last week. The Fed, pretty clear. We'll get the minutes this week, tomorrow, to get a little bit more insight in terms of where the Fed stands on all this. But I think it's tough to deny that this is a trend that's been playing out.
No doubt about it. And, the sterling had been in limbo for quite a while because the Bank of England, they don't want to raise rates. They haven't been sure about raising rates. But now, like you said, they got a real strong employment report. So that is definitely putting pressure on them to tick those rates up. There's no doubt about it.
I think some of that came from the extreme impact that they had from COVID. I mean, they get hit pretty hard. Let's talk a little bit about Bitcoin, Scott. I wanted to end there and get your thoughts on what's been playing out crypto recently. I've been tying some of the bid to comments from Fed Chair Jerome Powell, Gary Gensler, the SEC chair. Both had basically said we weren't going to do some sort of an all-out China-type ban. Certainly, there's been some legitimacy and some support tied to there. But this morning, Jamie Dimon basically calling Bitcoin worthless.
Yeah, listen, I respect Jamie Dimon almost as much as anybody as I do in this field. But I think that the market is just completely looking past what he just said and is really focusing on Gary Gensler, the SEC, and if a Bitcoin ETF is going to come to fruition. We've been talking about this for the better part of 3 years now, and there's a big meeting. I think it's set for either later this week or early next week. And is the SEC going to allow a Bitcoin ETF? I think we're seeing maybe a Bitcoin get ahead of itself a little bit in front of this news. But if they do allow or at least open up the pathways for an ETF here, we could see all-time records in Bitcoin. There's no question right now. There's a lot of FOMO out there again in the Bitcoin space, but it really does, from a technical standpoint here, it wants to break out to all-time highs and approval, or at least, like I said, an open pathway to an ETF could be the catalyst what takes us there.
Scott, appreciate you joining us here. A great breakdown in terms of a discussion as far as financial markets here, and capping things off with a look at some of the recent bid in Bitcoin. Scott Bauer, the CEO of Prosper Trading Academy. Always a pleasure. And, well, thanks to you, Scott.